Get the party started. Alrighty. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell, and I'm with TradersWay.com, an ECN that allows you to trade Forex, but also energies, metals, indices, and binary options, all from one lovely account. Boom! Yeah, 7:30 in the morning, New York time. Wall Street's opening up in a couple of hours. This is your daily Forex trading strategy session. It's what, the 17th? Yeah. Hey, isn't that a Fed day? Yeah. Yep. Fed day. So here's what's going to happen. It's kind of silly to do technical analysis, I think, when we're waiting for a fundamental event. So I think we can go through some of our charts, maybe identify some high levels or key levels of support and resistance, and then really cut out of here fairly early instead of going a couple of hours. I think we'll just go through, do some basic technical analysis. Like I said, identify key levels of support and resistance. So maybe later in the day when the news comes out, maybe the market will pop or drop down to these key levels, and then maybe we counter trend back. Something like that. For clients of TradersWay.com, if you have money in your account, $1 or more, then you can meet with me today at 1:30 in the afternoon, New York time. And, wow, excuse me. And at 1:30, what I'll do is I'll spend a half an hour and I'll go over a presentation on what the Federal Reserve is, what the FOMC is, what the Board of Governors is, what happens at the FOMC meetings over the course of 2 days. I'll tell you specifically who says what and in what order, and I'll take you all the way through the process until they make their vote, write the statement, and then release it. And by the time I'm done that presentation, guess what? It'll be 2 p.m. and Grandma Yellen will release the statement. At 2:30, after the volatility has waned, Grandma Yellen will do her Q&A at press conference, and I will cover that as well. So we'll spend a couple of hours together this afternoon. As long as you're a client of TradersWay.com, the registration button is the top of your private office. So just log into your TradersWay account. At the top, you'll just click webinars. It'll bring you to this page. You just click register, and look, it asks for your name and your email address. Wow. That's just so, it lets you in. I mean, so easy peasy lemon squeezy. So we start at 1:30. The release is at 2. The press conference is 2:30, and we'll wrap the thing up around 3:30. Does that sound good? What do you stink? Smell like a plan? Smells like victory. Cool. And again, the minimum balance is $1. So if you only have 38 cents, you know what? If you have 38 cents in there, come on in. I think that's a fair deal, isn't it? Coolio. So that's that. Boop. Yep. You want to scalp? All right. Yeah, all right. Sounds like a great opportunity to lose money, but sure. So we're moving on up here. Moving on up to the east side. So here's our low. There's our high. As you know, we're buyers of this market, but it's not, I don't anticipate it going up or down. I think the long-term price for oil is $50 a barrel. By long-term, how about until the Fed stops raising interest rates? Okay? What do you think? Isn't that interesting? So the Fed might raise interest rates today, as we looked yesterday. Like, how many people attended yesterday's event where I taught you how to use the Fed funds futures rate to predict the probability of a rate hike at the upcoming meeting? Cool, huh? So according to the differential between the October month and the September month, the differential, and then compare that to the new rate and all the blah 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 blah, 25% chance. And I believe it was much higher than that at one point. So right now we're looking at a 25% chance of the Fed actually raising interest rates today, but it could happen. See, here's the thing, and this is why the uncertainty is so high. There's no real reason to raise interest rates, but there may never be enough of a reason, but they need to do it anyways. The economy is probably strong enough where it doesn't need emergency measures. And that's it. But you look at it, you're like, man, we don't need to normalize all the right. We don't need higher interest rates. And I think the Fed knows that. But there's no reason to keep it at zero either. You know what I mean? So maybe they raise it super slowly, like if not now, when? And at the end of the day, it doesn't really matter. Okay? So if they raise interest rates to 1%, I think the interesting part of that is that it may start to entice banks to lend out their excess reserves. All right. So before the crisis, roughly speaking, how much excess reserves did the banking system have parked at the Fed? We know that there's required reserves parked at the Fed. But what about excess reserves? How much did the entire banking system of the United States have parked at the Federal Reserve as excess reserves? Zero. And we were having this discussion actually in my finance class at Harvard. We were discussing specifically the number of excess reserves at the Fed and applying that to the velocity of money and blah 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 blah. But so I have the number in my brain right now of how much excess reserves are in. Does anybody know? If it normally is zero, what is it now? No. 10 is required reserves. 10% is required reserves. How much? And it's not a ratio, I'm looking at a number. How many US dollars are parked at the Federal Reserve as excess reserves, meaning they're available to loan out? It's money that's just parked there doing nothing. $3.9 what? Would you would you like me to tell you? How about this? Type in a question mark if you if you care. Yeah, cool. 1.6 trillion. That 1.6 trillion could enter the market at any time for any reason. Okay? So does anyone have a potential reason why a bank manager would decide to not use that money? I mean, they're in the business of lending it out. Well, why take on additional risk? The Fed now, it's never done it before, but now pays a small interest rate on those deposits. So the banks are actually making money. They're also worried about some of the toxic assets they still have on their balance sheet. If those toxic assets, got into trouble, they would be into trouble because they'd have write-downs and suddenly they wouldn't have enough cash if they didn't have the excess reserves. But by and large, there's not a giant incentive to loan it out. Well, if interest rates start going up and the interest rates in the market, let's say in the bond market, go up, just as risk-free as the Fed's money, then you would make more money by loaning it out than just keeping it parked at the Fed, earning an interest rate at the Fed. So that's kind of the bajillion-dollar question, is what happens if the Fed raises interest rates to that money, and maybe that's the only reason the Fed would raise interest rates. I mean, Grandma Yellen did say she was going to raise interest rates this year, but every economist will look at it and say, well, there's no reason to do it. Right? Right? Is inflation too high? No, we don't have any inflation. What about jobs? Are we trying? No, we're at full employment now. But so anyways, I think the major reason they might want to consider it, even just slowly, just even 0.25%, is because then a bank would be incentivized to start using that money. How cool is that? Meaning you haven't even seen the market at its full potential. A lot of people say if the Fed raises interest rates, the stock market will fall. I say if the Fed raises interest rates, what if that 1.6 trillion gets pumped into the economy? Would that make the stock market go up, or would that make the stock market go down? Imagine. What is that? 50% of quantitative easing? I mean, think of that. Probably more than half of the quantitative easing that the Fed did hasn't even been put into the market yet. Are you hearing that on television? Are you reading that in your newspaper? That the majority of quantitative easing hasn't even entered the market? Here's what happened. This is great. Banks had toxic assets, and they didn't have enough cash on reserve to balance their balance sheet. And they can't sell the asset. It's illiquid because it's basically worthless. So what does the bank have to do to balance their balance sheet? They have to borrow from the Fed. So the Fed anyway shows up, puts trillions of dollars into the banks. And what did the banks do with the money? According to this conversation. The Fed gives the banks the money. What did the banks do with the money? Gave it back to the Fed. Because the money is parked at the Fed. You get it? The Fed gave the banks the money, and the banks gave the money to the Fed. Yeah. So the Fed bought bonds from the banks, and the banks get the money. Then the banks put the money at the Fed. So how's the Fed going to get the money out back? They have this huge pile of bonds now sitting in the vaults of the Fed, right? So now the Fed, to raise interest rates, will come back and sell the bonds back to the banks, and the banks then buy the bonds back, and then the money goes from the Fed to the bank, from the bank to the Fed. And I don't know, it's complicated. How funny, huh? So really, at the end of the day, nothing happened. So some of that's going to be washed out, I think, by the Fed slowly raising interest rates. Well, the way they'll do it is they'll simply sell the bonds that they bought from the bank back to the banks, and the banks get their bonds back, and the Fed gets their money back. Nothing happened, but somehow the banking system was stabilized. How funny, huh? And the whole thing was a zero-sum game. But wouldn't you like to be a Goldman Sachs bond trader, front-running the Fed every single day, making commissions on them? Hi, Goldman Sachs, this is the Fed. We'd like to buy some bonds. We'd like to buy $1 billion worth of bonds. You say, okay, Fed, we'll sell you the $1 billion worth of bonds, but it's going to cost you $1 billion. Yeah. Nice. Anyways. There was I read the book House of Cards, the one about Bear Stearns. One of the traders there, one of the lead traders, started hearing from his customers that they were having doubts about Bear Stearns' liquidity as a counterparty. And he blurts out in the book, just sort of under duress. I mean, just kind of says, man, I'm making like $36 million a year and I'm worried about losing my job. I'm like, you made what? How'd you like to work for a bank and make $36 million a year? Holy smokes. Do you get benefits with that? How much vacation time do you get? Really? Do I get 3 weeks vacation? Mama, what's vacation? It's where you go to work and you never come back. So anyways, we can identify some key levels of support and resistance. Let's do that. It's amazing though that people have jobs, isn't it? They have a job and make, $3 million a month on a job. I mean, I understand if you're like a professional athlete, right? I mean, even the best professional athletes in the world don't make 36 million, right? A year? I mean, what do the top 10 PGA Tour players make in a year? Somewhere between 5 and maybe 10, right? But you have to be really good on the PGA to make 5 million a year. So 36 million to be a trader at a bank? Wow. Yeah, that's what I'm saying. You got to be really good to make that kind of money. Or you just work for a bank. It's a job, huh? All right. Euro USD, kind of want to look higher out. Do you guys know what this is? This was from a long time ago. 5,260,000. Do you remember what this number was? We were listening to the S&P 500 stock market open, and you can hear the guys trading in the trading pit. And some guy bought a bunch of S&P 500 futures in about like 10 seconds. He spent over $5.25 million. That's what that is. Just a wave of his hand, and just like maybe it was over like 2 or 3 different orders. He spread it out over about 10 seconds. Just boom, 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 boom. He bought $5.25 million. Oops, what did I just do? I clicked a button, everything's going crazy. No! Oh, what just happened? Force shutdown cancel. What? I just clicked a button, all of a sudden everything decided to want to shut down. Wow. You guys still here? I just lost every trading platform. Holy smokes. Don't press that button. Yeah, no. Wow. It wants me to. It's asking, should I save your homework? I'm like, yeah, save my homework. Wow, what button was that, guys? There's a button on my keyboard that says shut the whole thing down, everything. Wow. There must have been a sleep button or something. Wow, holy crap. All right, well, let me reboot all my trading platforms, if you don't mind. Yeah, you even lost the desktop? Wow. What a scary thing. That's like Ronald Reagan pressing the wrong button and, causing nuclear holocaust. Wow, that's scary. Hang on, I got to restart this. Let's talk about pips, baby. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. Let's talk about pips. Let's talk about pips. Let's talk about pips. Let's see, I might have a full software breakdown here. Oh, no. It's not liking it. I don't think you see it, right? Yeah, well, that'll mess everything up. All right, well, it said it was going to display it, and now it's not displaying it. Oh, now what? Stupid software, man. What kind of world do we live in if I my keyboard and I have to reboot everything? One more try, ladies and germs. Let's talk about bips, baby. Wow. Yeah, no, but you don't see my desktop though, and that's the issue here. Share you. Hang on. All right, hang on. I think it'll work this time. If not, I'm going to lock myself in the bathroom and cry. Come on, Papa. Yeah, there we go. Okay. All right, so I only got one trading platform going, so I'm using one out of 18 screens. Feel so naked. All right, so let's just get going. The key thing that I wanted to do here is identify the key levels of support and resistance on high time frames. See, like what goes on with Windows? And you see this, how it actually changed my trading platform so that the periodicity was down there on my toolbar. Like what changes my toolbar? Wow. Okay. So there's some key levels of support and resistance on the shorter term. I don't think I'm going to care about that. So let's go down to longer term. Now, first of all, if the Fed raises interest rates, what is likely to happen? Let's just answer the basic stuff. If the Fed raises it, what was the question? If it does raise interest rates? Man, sorry, I got bewildered. So I'm just going to say it. If they do raise interest rates today, the dollar will probably get strong. Okay? If the rates up, dollar up. Rates down, meaning like they don't raise it, dollar down. Just want to make sure we got the basics here. The second part is if they raise if they do raise interest rates and the dollar gets strong, what is likely to get weak? What are you going to, right? Where are the trades going to go? What are they going to sell? If the market wants to buy dollars, what are they going to sell? Euro and yen. I'm good with that. So anyways, if they raise interest rates, I would sell Euro USD and I would buy USD yen. Now, if the dollar weakens because they don't raise interest rates, pound dollar will probably go up, euro dollar will probably go up. You know, and whatever. I'm sure you can find it. Let's talk about pips, baby. Let's talk about you and me. Let's talk about all the good trades. All right. You see how far back this goes? So we'll keep an eye on the kitty cat. Hopefully it's not too bad. The kitty cat. Let's look at this chart. Less complicated, I suppose. 4 hours. Oh, here we back to this thing. I'm just not going to delete this. I'm just going to get it out of the way. All right. Do you see any amazing support and resistance? I don't even want to try deleting that thing. I think we'll just mark that because it's recent. I think we should mark this. That's pretty extreme. But you see how, let me click in a little bit. Well, no. You see how this was an issue? And then that was an issue, and bring it out. So now I'll zip in a little bit. Okay. See what I mean? We're right in the middle of the range because nobody knows what's going to happen. Back out a tick. And the close where we are now is going to be kind of in here. Okay. Meaning if the first initial spike is up in here, then that might be a top. Now, let's talk about the market psychology here. If the Fed doesn't raise in September, will they never raise interest rates? Well, they'll raise either in October, late October, or early December, right? So what if the initial reaction is up? Where's my mouse, Mr. Mouse? All right, here we go. So what if the initial reaction is up, and then the market says, well, they didn't raise now, but they'll raise at the next meeting. Back down again. Okay. So if it's not today, it's sometime soon, isn't it? So you could get initial dollar weakness followed by relative dollar strength. Relatively strong, right? Because people say, well, if not today, then the next meeting, and they want to get short again somewhere. And the higher, the better. If not 118 or 117, try again at 122. But they're going to want to get short again. Like, why is the market overly short now anyways? Well, because they anticipate the Fed raising interest rates. So if it weakens today because they don't raise interest rates, then someone's going to say, well, if not today, then soon. And they front run it again. Does that make sense? The only caveat to that, the exception to the rule, is they don't raise interest rates and then Janet Yellen says at the press conference, because I don't think they'll say it in a statement, but they come out and they say, we change our model. And everyone says, what? And they're like, yeah, we don't consider it full employment. We're not hitting our inflation target. We don't consider, and they can just say, things have changed. When I said we were going to raise this year, that was before China collapsed. We had Europe recovering. Remember what was happening 6 months ago? Europe was starting to see, some positive results out of quantitative easing. So we're like, yeah, Europe's going to do quantitative easing for the next 2 years, and that we're going to fix them. And everything's going to be good and fine. And well, what if their outlook there changes? But, and what if they change their target as far as the unemployment rate? I mean, I think that's going to be the question one, right? Okay. Emad says Euro USD is going to go up to $1.24 before dropping. Sure, that's a possibility. But the bigger news is that unless something dramatic changes in the Fed's modeling, for the economy, then even if the dollar gets super weak today, you're still going to buy it back. Okay? So you just got to be careful, and you got to be ready, and be short-term long, but long-term short, and all that kind of stuff. Okay, just like we did last time. This big rally that we had recently, up and up and up and up, I said simple things like stay focused, stay calm, be the trader you want to be. If fundamentally you're bearish on this currency pair, then identify your levels of resistance, wait for reversal patterns at smaller time frames, and trade the way that you would want to trade. Should we focus on Philly Fed? No, not really. Hey, Emod, you're yelling, dude. All right. Mousey, mousey, mouse. Here it is again. All right. So anyway, so there's some key levels of resistance that, there's some high side stuff. Emod says 124. Let me eyeball 124. So up in there. Yeah, that seems fine to me, dude. Yeah, 124 is even a little high. You're looking at it that way. What did I say? I said 122. I kind of like my number better, but whatever. Is that right, Felipe? So anyways, we'll take Emod's advice. Excuse me. I don't think it's quite 124, but the market could overshoot. Okay, so that's fine to me. 122 to 125, whatever. The issue is you let it run up to what is resistance, and then you look for a reversal pattern and you trade in your fundamental bias. Now, I think Emod might be looking at a 618 Fibonacci retracement, so sure, to me it's the same. That's fine. It's all good. Okay? But it's pretty rare to have Uncle Wayne bust out a weekly chart. But yeah, I'm fine with that. How long would that take to get up there? Not long at all. No, not today, right? But I don't know. Let's add an oscillator. Let's see. What should I do? What oscillator? Let's use a Stokes, because it's a price issue, not a market issue, right? Indicator, oscillators. Nice. I love how it keeps it. Okay, good. All right. Let's go to the daily. Boop. It would happen fairly quickly according to the oscillator. So, up for a week, maybe? See, I think what would happen is we would spike. Yeah, it'd be up for a week or two. I don't think it'd be terribly long. And then we would, we'd head up there, and then we'd start talking about the inevitable. Because to me, that's the bigger issue. Is it's inevitable. And on the long run, over the course of years, whether they raise today or they raise 12 weeks from now, is really irrelevant. Yes, sir, Rick. Yeah. All right, so that's one. That's a support resistance. Excuse me. So has anyone registered for today's event to trade the FOMC event live with me? Yeah, the link is there. You log into your private office at TradersWay.com. Here, let me go through the whole process. Hang on. Let me see if I hit back. Am I still logged in? I don't know if I'm logged in. Hang on. All right. So you log into TradersWay.com. Oops. And it puts you in your private office, right? So I have a live account. So if I click on webinars, you can, I guess I'm already registered or something like that, right? So anyways, you can click on that and register. Okay. Okay. Oh, I see. I can't log. Anyways, I think I'm registered. It's trying to let me in, but we're in this webinar, so that ain't working. So anyways, that's why that happened. But that's how you do it. Okay. All right. So here we are, USD yen. Oh, snap. I've already identified key levels of support and resistance. Well, that's pretty helpful. Okay. Buy zone down here. Remember, we were just down in these areas, guys. Remember? You could have bought it at 119. So this is a 4-hour chart. Notice how beautiful the price action is. Double bottom, higher high. Now, I've taught many of you guys that that pattern is a pattern that you could base a career on. Now, you might not make a ton of trades, but you could build a very successful career and probably have a very high winning percentage. Very, very basic pattern. Double bottom at support. Okay, 119 is a psych level. And fundamentally, you would expect this to go up. I think you would agree with this. So you get the markets falling, fine. It double bottoms on a psych level. Makes a bullish engulfing candle. What's the key word? Hammock. Thank you. Draw your fib. Oh, snap. You see it? Depending on your time frames and stuff, if you trade a daily chart, maybe there's one there for you. But you could be up here, let's say, for a few days, and then you get knocked out, and it comes down, and you do it again, goes up for a few days. But There's some good trades in there, guys. Let's talk about pips, baby. Do you like the pivots fat like this? Look what we're on right now, guys. The monthly central pivot point. Monthly pivot. For some reason, it prints the wrong price. Forget it. Notice if I put my mouse over it, it's 120.87. Right? 120.87. Hey, 120.87. What? The central pivot point is 120.873. 120.877. We're less than a half a pip off. Interesting, huh? Oh, okay. Rustum asks, going back to the double bottom. Let me zoom out. All right. Here's what you do, okay? Rustum, do I have your attention? Right. Will the real Slim Shady please stand up? Please stand up. I'm Slim Shady. Yes, I'm the real Shady. All the other Slim Shadys are just imitating. So won't the real... All right. Double bottom, higher high. Now what do I do? Fib. And do I stay on the 4 hour? No. Drop to a smaller time frame, look for a 5A cross and a 15. Gone. Also, do you think the weekly central pivot point could have been part of your analysis? Okay. So you got a cluster of a weekly central pivot point on top of your 3A2. You're probably thinking, you know what? It might kick off that central. And then on a 15-minute chart, you see a 5A cross up. Take a shot, dude. Drop a stop. That's how you do it, Rustum. Right, crisscross? Let me get her Mac Daddy. Yeah. All right, cool. So that's one of the things I look for in trading is clusters. Okay. Today's daily central pivot point is 120.33, and it's a 382 Fibonacci retracement between yesterday's high and low. What? Oh, here we go. Don't click that button. Let's try this again. Oh, look at that. Moved my curiosity. Okay, let's try this again without the world freaking out. All right, yesterday's high, yesterday's low. If you're a swing trader, where do you buy? Somewhere between the 382 and 618 Fibonacci retracements. Okay, this is yesterday now. So the buy zone today was right here. Price came down and for 1 second touched the 382. And we're now approaching the 1382 Fibonacci extension caught on the monthly central pivot point. The projection, if you're going to use Fibonacci as a projection, so it came down, hit the 382, it predicts a 1618, which is predicting that our top for the day, assuming there's no news, of course, but of course there is news. But The Fibonacci theory here is predicting that we would go up to 121 and a quarter. Cool, huh? But what's the real show here, guys? The real show is we're just consolidating. I have two places to buy the euro dollar. Sorry, the euro dollar, the USD yen. We've talked about it for a month. I haven't adjusted any of these lines. I mean, they're there. We review them a lot. And I like to buy here and here. Why? Because it's support. Right? Aggressive support, conservative support. So, what will you do if we get this today? I'm going to mark this one just because it's there. Okay? Then there might be an opportunity to buy this on a longer term trade. Coolio? So that's why I have this extreme setup. If it goes the other way and you find yourself up here, I'm going to trade it eventually as a break. I mean, how far would it go today if they raised interest rates? 125? And then it's going to come down. Okay? JG Wentworth has a target at 125? Yeah. All right. And to be clear, I wouldn't sell it at 125, but we know that's a top. And it's also a monthly R pivot point, R standing for resistance, right? So, yeah. Let's talk about all the good things and the bad things that may be. Housing starts 1.12 million. Initial jobless claims 264. You know, my computer says it's 829. So I apologize. I don't know what Windows has done. Current account. Yeah, current account 110. I don't know. I don't see anything interesting in any of that. So maybe just to wrap up, S&P 500, little change. NASDAQ actually up 0.61%. 10-year T-note, it's paying a yield of 2.29%, which means bonds have fallen. Remember, it wasn't that long ago, it was 1.8%. Now it's 2.29. So the bond market is coming down. Oil has gone up. Remember, it was less than 40. Now it almost made it to 50. USD yen basically flat. Euro USD basically flat. The CAC is up 0.25%. The DAX is up 0.25%. The FTSE is down 0.5%. So to prepare yourself for the big event, keep doing what I'm doing here. Open up like a 4-hour chart and a daily chart. Identify the bigger levels of support and resistance. And just imagine that the big players, the big institutional players, they're not messing around with tiny little levels of support and resistance that scalpers are going to use, right? They're going to have big levels. My webinar today, the special event, live coverage of the FOMC event, it starts at 1:30 p.m. You log into your private office at TradersWay.com. And if you have a live account, when you click on webinars at the top of your account, it will bring you to a registration page. I don't think I have that window open anymore. But you just simply click webinars at the top of your private office. Oh, here it is again. All right, so here it is. This is my account. Wine McDonell, live account. Cool, I got more than $1 in. So I would just click webinars and it'll let me in. Okay? 1:30 p.m. New York time. So I'll see you there. And then tomorrow is a Friday, so I will be at fxstreet.com. So the videos for that, like this video that this recording is on, they've been uploaded to the TradersWay YouTube channel, but we've stopped doing that, and now I'm uploading them to the Forex Today channel on YouTube. So there's two places now you can get the videos. You can get it here, which is the Forex Today YouTube channel, or you can go to forex.today, and right on the home page, Forex Today Live Strategy Session, VIX and Fed Funds Rate Analysis for Currency Traders, right there on the home page. And there is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. On the first page, there's at least 12. Just on the first page, there's 12 trading ideas for today. 12! Just on the first page! So again, either at forex.today or YouTube, we need 500 subscribers before we can get the channel renamed to something easier, like youtube.com/forextoday. But anyways, you can find it, and the link is provided below. Make sure you click subscribe. It'll be here. New visitor. It'll be over here. Make sure you click subscribe. That, like I said, once we get more than 500 people subscribed, then we can get a nice, easy name for a custom name, so you could go to something like youtube.com/Forex Today. Okay? So peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client of TradersWay. And like I said, if you have a live account at TradersWay, we're going to treat you as a VIP. And I'll give you 2 more hours of my life, specifically focused at the FOMC rate decision. You're going to learn a lot about the Fed today, and then we're going to get the news. We'll trade the volatility, and then we'll listen to the Q&A together and discuss what it means. And if she does change the model, which she could, or she could stop paying interest on those Fed loans or the Fed deposits, that would be radical. She could change what it means to be, to have the economy be at full employment. She might move that. That could be radical. So yeah, if I were to guess, if I were to just with nothing else to back it up, a total guess, she doesn't raise interest rates, but she changes something. And the market might not be ready for that. Because then if she changes her model, everyone has to change their model. That'd be, So be there, be square. Open a live trading account at TradersWay.com. So I'll see you later today, or I'll see you tomorrow at FXStreet.com. Cheers.